You know that I've kind of treated trade as, at a market-wide basis, a kind of nuisance-level concern for the markets. It has intermittent effect because one of the reasons, though, that I think now it might have a little bit of resonance is it feeds one of the other big fears, which is a slowdown in economic growth or a soft patch in non-U.S. economies, in Europe, in China, in the emerging markets. So this is one of the reasons I think the market right now is a little bit inclined to be cautious. And I do think that the stresses we're seeing, in particular in the emerging markets, with profound underperformance in those stock markets, currencies also flaring up down there, is one of the reasons that I think we're a little bit twitchier when it comes to these trade headlines. But also the market's own field position coming into this week contributed to the fact that maybe we were primed for some kind of a backing off. We basically had stalled out at a level that we had seen only back in March. You were up almost 8% in 10 weeks in the S&P 500. And I look right now, if I see the S&P down 0.4%, you didn't need any trade headlines to get the S&P down 0.4% from a 3-month high after you've had this run when you had sentiment looking a little bit complacent. So I do think it's kind of a blend of factors. Trade, perhaps a growing one, but it's really not the only story for why the market is hesitant here.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.